Everything in this video is for general information and educational purposes only. Nothing presented constitutes financial product advice, personal advice, or a recommendation to acquire or deal in any financial products. Any examples are illustrative only and should not be relied upon as indicators of future performance, as past performance is not a reliable indicator of future performance. All right, everybody, just going to go through a scalp trade that I took the other day just to explain my methods and the different indicators I'm using for this particular strategy and how I've been using it to take some good trades lately. So first I'll go through the trade, then I'll talk about the different indicators that are actually being used here and the settings for those. But I will post this in layout in the Discord channel. I have done before, so it's not going to be any different. Yeah, at least you'll have the latest of it, and there won't be any confusion then. So basically, the other day, from a high time frame basis, I was looking for a long here, so I'm waiting for the pullback. So if you're looking on the higher time frame charts and we're coming back, then we're looking to buy and then and hold for just a small amount of time. This is a scalp trade. We're not meant to be holding for particularly long time because, as you'll see with this, it did actually eventually just roll back over, and I'd completely scaled out. Actually scaled out fairly early. So just to give you a bit of context, I did actually take the first take profit was just in this zone here. So I'll circle that for you. So just in this area here, actually I've got the arrow already here. So I'm basically waiting for, so this was actually a downtrend. So good idea to take some profit when we get to sort of a point where we might actually continue with the downtrend. So we may have just seen this come straight back down here, sweep that and then go again. Or it may have, or may have even continued on with that downtrend. You don't really know what's going to happen here. So it's good to take some profit early. And with this strategy, you're getting in with fairly high position size, so you're going to get hit with higher fees, and also that means that there's an opportunity for you to hold on to a little bit for a bit longer, and then make some gains there while you've actually covered your stops with taking profits early. So in this case, what I was looking for is, as you can see, there was these started rolling over. Then we had three distinct drives down. So you can see this one drive, two drive, and this I'd say is Canada's all one drive. So with this indicator, you can see, so this is the high-low churn or the liquidity hunter. So they're the same. We just changed the name, just haven't updated this chart yet. Basically, what happens is when we get a high volume candle, it comes above this high volume trigger point. Plus, also it is the RSI is really low. So we're on the 3-minute chart here. So actually, I'll talk about that now. So 3-minute chart and 5-minute chart is what I'm using here. So basically, we're looking for the trigger. So we get them here. We're looking for some previous changes in liquidity. So this is the open interest. So you can see there's been a massive drop in open interest on that candle. I'll just zoom in a bit here. So this open interest dropped pretty hard here, and that would be because there would have been some from here. Anybody that traded up through here probably had their stops in here. So this looks like it was market makers pushing down the price to try and get some sort of liquidity grab here. They've got that, but the price didn't return straight away. So they've kept pushing it down. So I've had the third drive down, and then we get the a second liquidity volume spike here, and you can see that liquidity is increased here. So this could be people shorting, or it could be people longing. We don't really know that, but you do have a little bit more interest coming in here. So if it's people breakout shorting and really dumping in here, so this would be basically the scenario where you're going to have trap traders. So you're going to have people going short here, and then we can take advantage of them needing to actually get out of their positions. But either way, what's happening is that there's a lot of people doing business right here. So you want to be in the same position and working with them rather than against them. So at the same time, what happens here is, so what happened was I saw this pin bar, got the alerts for this, saw that we were in extreme oversold with the on the cipher. So it's a cipher for the in the 3-minute. So this is just a normal one. RSI is also this is the RSI multi. So RSI is also quite low. So everything's down. And if we come over here to the 5-minute chart, you can see this is the 15-minute. So I've got the fixed time frame ciphers on. So 15-minute is also in oversold, and the 5-minute. So this is on the 5-minute. 5 minutes also oversold. So that gave me some confidence that with this sort of pin bar action here, I'll get the profile tool on there as well. you can see that there was yeah, we've got quite a nice D-shaped profile there. So you can see that the point of control's there. We've closed back above it. We've had another sweep through the point of control, closed back above again. All those signs all lining up at the same time, starting to make this look like a good trade. I use this long tool from Tradingview to normally sort of just a guide as to what size position you need, and I just find it a lot faster than trying to do other calculations to work out your risk profile. So I normally set this up just simply with $10,000. So if I'm scalp trading, I'm not trying to basically yeah, become a millionaire overnight. So I'm just basically set it up for $10,000 at 1% risk, and then from there I can easily do some mental mathematics to basically decide on my position size. If I'm a little bit skeptical, I might go half of that. If I'm super confident, then maybe I'll double it or triple it and just see how we go. And that way, you know, I'm only risking 100, 200, 300, or 50, depending on which way I'm cutting that. So that's the way I think about it. So it's worthwhile having those in your set up in your favorites. I normally like these horizontal tools along there, fibs, you know, some of these other measurement tools that I use on a regular basis. So that's how I do it. So basically, I entered there. As I said before, first, some people call it first sign of trouble. This sort of area here where we're coming up to the top of the this downward channel, and if I turn on oh, you can see with this, right? So we're coming back into the moving averages, right? So this EMA ribbon that I've got running here, we're coming back up into the 20 EMA. So that's sort of like a sign that, you know, it might actually roll over there. So I took some profit right here, and then so I normally just take 50% straight out. So getting pretty hard, take 50% out fairly early on, then let some of it run. I let the rest. I then took some more at this level here. So that was, as you can see, there's a bit of a level there. So there's a order block there, a bit of a level there. You can see there was a little reaction there. So you know, these things don't happen by chance. This is you know, that reaction there was other people like me thinking, oh, I think this might have gone long enough. So then I let a little bit run, and so then we had this return down here, and then I think I was completely out at this next point up here. So then, as you can see from there, she chopped around a bit, but look, you could have sniped the very top. You could have said, oh, one of these order blocks was and taken out of the bottom there, but that's all just hypothetical in hindsight. But at the same time, I got out in 3 spots there, which were reasonably good return, and yeah, then it did actually roll over there, so that was quite good. And to be honest, if it kept running up, I'm not going to be upset, right? So don't ever get too upset if you're just scalping and it runs away from you. There'll be another trade. As you can see down here, there's another opportunity here. I was in bed at that time, so you know, there's always going to be another trade. So don't, especially with sort of these scalping setups, don't get too caught up if you miss it, or even if you get stopped out. Just get back in again. And look, I'll go through that scenario too. So if we go back. So you can see here was another opportunity here. I would have been less confident taking this one because you can see we're still quite oversold here, but we are moving down. So I guess I probably would have had a crack at that. But there was less indicators showing, so I would have been a lot more cautious. But in this case, there was a double bottom, so that's actually quite nice. So if you get sort of this you know, double pin bar action, maybe if we go to 15, maybe we'll see something exciting there too. Yeah, so you got the old double doji pin bars here. So if you're on the 15-minute, you can flip over that. I do actually like to flip to the 15 sometimes, but I'll talk about that in a minute. Anyway, so you can see here we've got a double bottom. We're well oversold here, and oversold on the 15 as well. Sorry, the 5 as well. 15 not so good. So I probably would have, if I had been thinking to trade that, I would have gone in at a smaller risk there. Just because we're not in this, the hourly's not particularly good. So slam dunk sort of situations, which I think are ideal, would be more like this one, where we have this is set up as the hourly oversold, especially if it's gapping out like this. So when the pink really starts to gap out over the blue, so the cipher is basically a measurement of the EMA. So it's just telling you the basically acceleration of the price. It's how fast this is dropping here. So it's just a couple of different weighted EMAs, and then just indexed so that you get this nice, plus or minus sort of index chart. So it's yeah, look, no magic there. It's pretty simple, but it gives you good indication that things are moving one way or another. If it's only like a small amount like this, it's sort of just rising up slowly. But if it starts gapping out, you can see that yeah, everything's really sort of started driving in one direction. So in this case, we had it dropping real hard. We've gone it the hourly is massively oversold. 15-minute, we've got divergence there on the 15-minute. We've also got divergence happening here on the 5-minute. So this would have been another ideal opportunity. You can see we're also coming into the 18-day day area high on the rolling VWAPs. I couldn't tell you offhand if the rolling VWAPs have been that confluent. Looks like it has been actually. Looks like the 18-day has actually been quite nice here. I'll have to consider that in the future for Solana. It was working really good for ETH for a while there, so that's why I actually have this as the 18 days. ETH was respecting the 18-day very solidly, so I started throwing that into my analysis. So I'll have to keep an eye on that one. Yeah, so in that case, this would have been a better trade. Like this would have been a way higher probability trade. So you could go in there with bigger size, a bit more confidence, and yeah, just trade that. But yeah, just recapping, what I'm looking for is first of all, if the hourly is looking good, so we're oversold. But if we're not oversold on the hourly, if it's in sort of some region around the 50%, then we might get a nice little bounce. We're looking for the three downs or into a strong level. I didn't mention that before. We went into a strong level here. This was just kind of middle of the nowhere chopping up. So we don't really have that confluence in this case. But we do have the 3 drives. We had this massive liquidity grab here, which was quite good. The only reason why you wouldn't enter there, even though you had the liquidity grab there, you had the drop in the open interest, but we weren't really oversold at that point on the 3-minute cipher. So that would keep me out. I'd normally wait for it to be quite low, or we've had the reversal dot happen. So in this case, this was just an opportunity just to wait a bit longer. And look, if you miss the trade, just remember there's always another trade. Don't freak out, or maybe you can just go in with a little bit more size. And what will actually often happen is you might actually get this low. If this isn't really that clean, then you might get another sweep of this, right? It might just go up a little bit, go like that on you. So if you get knocked out and everything else is still lining up, just take the trade again. That's just the cost of doing business, getting stopped out like that. And you're trying to get in super tight here. And as you can see, if I get rid of the replay here, and select this, we're looking at a 5-hour trade. So where did I say that I took that? In here somewhere. Wasn't the last, which is there. At the top of that. So 4.6R. Look, if you get stopped out and you know you're gonna, or not know, but you're regularly getting 4, 5, or 30R trades, as I did the other day, then you can actually take a few hits and still be making money. So just remember, like, you're not gonna hit everyone perfectly. You're gonna have situations where you're just gonna get stopped out, and it doesn't mean you're wrong. So just this is just the way we play the game. Anyway, so get in there, get out early, or maybe you would just leave a bit of a runner. So trade I did the other day on SUI was pretty epic actually. Was Love and Life. I can't remember where it was now. I should have prepared that one. Here we go. Oh shit. Here we are here. So I think by the time I got out was somewhere up here. I can't remember exactly. It was overnight. I'd set my stop. I'd set my stop in here somewhere and got knocked out of the trade. So in the end, it was sort of a 60+ trade, and that was just from this same setup. So exactly the same setup. As you can see here, we were right down here in this oversold territory on the hourly. We also had the divergence on the 15-minute was still coming down. 5-minute was oversold, and also the 3 minutes was oversold there. So So that ended up being good. So I got out fairly early for most of it. I should have kept my lines on this chart. I think it might have been in here somewhere. May have been even earlier. I think it was, I reckon I would have taken it out there. So 50% straight away, which would have, you know, still would have been a 4 hour trade nearly. So where I first take the first chunk out. So that's, that's what you're aiming for. And then took some more out as we progressed up here. I think that's why that line's in there. And then I left a quarter to run. So in the end, it wasn't like I held on to the main part of the position, but I did actually make quite a bit of money out of it. So quite happy to do that and just protect yourself along the way. Like I didn't know that this could have just reversed back straight away. Who would know, right? There's no indication that anything's going to happen, really. This was just a lucky break. So I really like to do that. So the style is take out 50% straight away, take out another quarter at some higher point, and then you've covered all your stops, and then you can happily just let the last quarter run. If some good news comes out, then you're off. And to be honest, you've actually got in. If you had got in there on the 1 hour or something like that, this just means that that quarter that you've left on is probably still higher position size than what you would have done if you had just got in on the 1 hour. So even if you did decide here on the 1 hour and went, oh yeah, okay, so that's going to go up, maybe you only put in 23, whereas we're already in at 70. So yeah, just a little bit less. So you've already made money then. So you've got in at a similar position size. So the quarter of your position was similar to the position size you would have taken if you had done it on a higher time frame. So that's the way I'm thinking of it at the moment. I'm getting in, scalping, leaving a bit to run. It's the same as if I've, the higher time frame analysis had have got me in and I've already made money. So yeah, that's about it. All right, I'm going to just go through the settings on these now. So I'm using this open interest suite indicator. So this is set up as the open interest change times the relative volume, and that's why you get these spikes up and down. The default is like this. So I do actually look at this sometimes as well. I'm actually using this. Also on Bitcoin, it's been really good. Like the levels actually sometimes get respected. So just if you got like a level down here and the price is coming down to it, just keep an eye out on it because you might get some sort of reaction point there. You can set an alert on that if you want. Go, oh yeah, just whack an alert on, and you might get an alert for that. Oh yeah, I'll go through alerts shortly as well. So can set alerts for that. I wouldn't set alerts for the 5 minute. You can see you're going to be pinging off quite a bit. So you're just going to end up with too much noise. Same with the 3 minute. 15 minute is probably one of the ones that you could set an alert for, but I'd set it for the alerts. I'll just show you how to do this. So if you select the indicator, so just to prove this, 15 minutes, right? So it's set on the 15 minutes. It's a fixed time frame, cipher. Go over here to the alert, add your alert in. So because you selected it already, it's already set here. So you don't need to adjust any of this. For this one though, I wouldn't set it on, so the default is crossings and overbought, oversold. I would leave it at the crossing. I need to change the name of that probably to say level crossing. Needs to be that one, level crossing. Okay, mental note, need to change some wording on some of these levels. All right, and create that. So that'll give you an alert when you cross through. So wouldn't have alert here, would alert here, would alert there, and not there. Oh, sorry, I'm on the wrong part. So it would alert there, it would alert for this one. So you're getting alerts at those deep oversolds. I would also set up the hourly. So definitely set up the hourly because if you're into this oversold territory, this is where you really want to be hunting these high probability trades, right? So this is where the action is. And to be honest, when you're first starting out, I would say just to get used to it, just wait for this hourly to get oversold. Once the hourly's oversold, you're going to get some bounce at some point. It may not go to the moon, but it will be a bounce, and it's going to be more likely than if we're sort of in this downwards ranging area. If I can back test this a bit as well, we go back down here. Look, I got little drawings everywhere here. So here's another one which I must have been looking at taking, or probably posted the chart as well. So you can see hourly's massively oversold. 15 minutes massively oversold, 5 minutes massively oversold. If we went all the way back into the 3 minute, it would be oversold as well. We would have got the alerts and these things happening. So definitely set up your alerts for this. So once again, click on the name, go over to your little clock, alarm clock, go to alerts, go to plus. It's already set for you there. So 60 means it's set for 60 minutes. I think probably leave this one on the normal. Like I don't think you're gonna get too many alerts for that, or just do the level crossing, whichever one you want to do. Anyway, have a play around with it, and then and add that in there, and then if you go to this current symbol, current time, you can see yeah, I've just added an extra one in there. So that is that's how I do it basically. And what else here? So I'll just go through these. So this is 1 hour, 15 minutes. This is the open suite. So this is just the default setting. If you want to play around with that, this shows you when the open interest is dropping, and you can see, you know, it puts a little red. It actually draws on your chart as well, changes the color, but gets a bit messy with too many things changing colors. But basically, you can see like you know, there's a massive increase in open interest here. Then it went up, and then it just has been dragging out here. So this means people are probably basically getting stopped out along the way here. So they're all going short, and they're just getting stopped out. So it's reducing the open interest as their positions are closing, or it's people with longs that are closing because we're getting a bit looking like it's going to roll over. So unfortunately, with open interest, you don't really know which way it's actually going. It doesn't really tell you which is what the longs and shorts are. You're just getting the indication that the interest is increasing or decreasing, and it can be both ways. You can be people getting like if it's reducing, it could be people getting stopped out, or it could be people closing their positions. All right, what else? So this one, I'll go back over this. So this is the third one down. So this is the change in open interest times the relative volume, and that gives you these nice spikes. And that's yeah, you really want to get a feel for what's happening when you get these spikes. You'd see there's been some big spikes here. So this one was a massive drop there. So that must have been people getting liquidated there, I would have thought. To have that sort of amount of drop in open interest with that sort of volume would probably have been stopped. And if we look left, it's probably because there was a massive amount of shorts that it went in and had this stop above there. So maybe it was because of that level there. Maybe it was a level further back. It's a bit hard to go back and look at that now. But anyway, I'm kind of rambling a bit. So yeah, we're looking for, just a recap on that, we're looking for this to be oversold. If not, we want to have alignment of a few other things. So we want the 3 minute to be in deep oversold. We want some change in liquidity, meaning that there's a lot of stuff happening, coinciding with sort of one of these high volume triggers. Just gives you the extra complement. So if you have all of these things tied together, 1 hour oversold, 15 minute oversold, 5 minute oversold, 3 minutes oversold, liquidity changes. So it's people being stopped, people going long, and at a high volume. So these are generally aligned anyway. We get the high volume trigger, and then yeah, you're looking good. Also like to just keep an eye on the this multi RSI as well. So you can see it's a bit messy because there's, you know, a lot of different RSIs in there. So you got 5, 15, 30, when they're all coming down and all being in this oversold territory, you know, it just gives you a bit of extra confidence that something might change there. Anyway, that's how it happened, and yeah, let me know in the Discord if you need a hand with that, or if you yeah, want any advice on this. But once again, yeah, risk management's really important. Position sizing and risk management are the most important things here. So make sure you set yourself up so that you can quickly do this with your charts, and that way you'll make less mistakes and won't accidentally put in a 8 Bitcoin trade when you meant it to 8 ETH like I did the other day. Anyway, have a good happy trading, and I will speak to you next time. If you enjoyed this content today, please smash the like button, subscribe, and hit that notification bell button. So if you want to learn how to trade and really master the markets, see the links down in the description below, where you'll find links to our premium indicator suite, our infamous premium Discord group, and the Market Mastery 3 training course.
where you'll learn not only how to trade with our trading style and our premium indicators, but also get a well-rounded view of the macro economy and liquidity cycles.